Okay, this video is going to be on the working capital schedule and how to solve it. So let's get to the module first. This is going to be week 7, working capital. And before you do anything, it might be a good thing is to read the step-by-step process and how to solve it. I have all the equations set up, each step how I would solve it. So if you get confused in the video, I'm not sure what I selected, make sure you go through the process and this will show you how to do it. Okay, so this is the working capital schedule. This is going to be a little bit longer than the previous one, which was the income tax schedule. What is the working capital? Well, I want you to think about it is the on the accounts, the current assets and the current liabilities. It's what goes into the company that is working capital, as in inventory or accounts payable on the liability side, or accounts receivable on the asset side. And if you remember from managerial or corporate finance, it is net working capital, which we will be solving. And then we want to know what is the change of it, because that has to do with our cash flow, how much cash we actually have. All of these right here, when we're looking at, these are total account balances. This is going to go into the balance sheet. And then we got days in. This is another way to look at it, the percentage of either sales or cost of sales that have to do with all these accounts. So accounts receivable would be a percentage of sales. And then we want to find out, once we include the days per year, that's going to be the how long it took to collect it, or how long as long as we have the inventory out, depending on which one we're looking at. So the first thing I'll do is I'm going to start with the days per year. Actually, before we start there, I'm just going to show you above. The working capital schedule is really the account balances to these on the balance sheet. We have accounts receivable, inventory, prepaid expenses, and other. All of those other than cash, and this is current assets, will go into our working capital to forecast the balance sheet. And then if we look at the current liabilities, it doesn't have to do with the revolver, that's debt, but it does have to do with accounts payable and other. Those are the two on the liabilities. Nothing on long-term debt, just the current liabilities, current assets. It will have to go into the cash flow statement. Why? This is the change in working capital. In other words, if I have more customers that come in and they purchase on credit, I'll have less cash. Or if I expand different things for, well, this is going to be change in working capital, but if I expand, let's say, accounts payable, that means I'm not going to pay off my debt right away. I'll have more cash. So we want to make sure we calculate all that. And then we got the income statement we need to plug in some data, which is going to be net revenue and cost of sales. So let's get back to the working capital. So the only two that we'll be plugging into is the cash flow statement and the balance sheet. And we use the income statement because we have to get net revenue and right here, and then cost of sales. A lot of people make the mistake and do total cost, which would be incorrect. All right, first let's find out how many days are in that year. So this is the equation we're going to use. We want to go equals, and I'm going to type in date, and now it's going to ask the year. I'm going to do this year right above it. My Excel's not working properly, but now it's asking month. I'm going off a 12-month cycle, and then it's asking how many days. We'll do 31 days. I'm going to close that up, and then I'm going to hit minus date. What is the year? The previous year, comma, month, 12 months out of a year, comma, and then we have 31 days. So some businesses might not be open for all 12 months. We can adjust it depending on how many days we are open for business. All right. Okay, we did that correct. So now what I'm going to do is highlight it over Control R. One thing I don't like, it is a decimal. I don't want that. Okay. So we did days per year. So we got that taken care of. Some are 365, some are 366. Next, we're going to do the income statement. I'm going to bring down the net revenue and cost of sales. So I'm going to go all the way up to the income statement. Net revenue. And I'm going to look right below it. Cost of sales is right below, which is I'm in cell I96. I96, that means 9798 is the next one I need. That'd be I98. So I got those two there. Remember, cost of sales and net revenue. Bring that across. Okay, so we imported down the two variables we need from the income statement. Next, so we got a couple things going on here. I got 2 years of actual sales that we or actual data that we have, and then we got the forecasted years. So the first thing I'm going to bring in, what I have record of, I have account balances on the balance sheet for our last actual years. So I'm going to go up to the balance sheet. The first thing is going to be the account or current assets. So that's accounts receivable. I'm going to go find it right here. There's accounts receivable. Now, the number one mistake people make is they pick the wrong year. I'm picking 2 years, so do the 2020. And I'm going to pick the accounts receivable. I'm going to go over 1 year because that's all we have. And I'm going to go 4 down. And then that's going to give me the total balances. And now I need to find the 2 that are on the current liabilities. Right here, account payable. I'm going to select that, highlight over, down, Control RD. So we have the accounts balances on the last 2 recorded years. Next, I'm going to go up to the days in. And what I'm going to do, I'm going to go to the projected days in. Actually, before I do that, if I go to the assumptions, I already have that out, right? Already have the working capital days in, how long I believe it's going to take me to collect accounts receivable. I made an educated guess, 45, 40, 40, 40. So this is all just guesses based off of previous years. So before I actually do that, or maybe before you put those numbers in, let's find out what our days in of our last 2 recorded years. So this is how we're going to solve it. I'm going to say equals. I want you to think about days in as a percentage of something. So what I'm going to do is I'm going to say equals. I'm going to take my account balance of accounts receivable. I'm going to divide it by, now accounts receivable is the only one like this. I'm going to divide it by net revenue. All the others are by cost of sales. So I'm going to divide it by that. And what is that going to give me? That's going to give me the total percentage of my revenue is of accounts receivable. This is going to be incorrect. I'm just going to show you. That's going to be roughly 10%. I could do the decimal. It's probably a little different, but roughly 10%. But that's not what I'm looking for. I'm looking at how long it took me. So I have 10% out. So what I'm going to do is multiply that. It's almost like a percentage of my accounts receivable of sales. Since I divided to get the days in, I'm going to multiply that times per year. And then that's going to give me, on average, it took me 43 days to collect. I'm going to go over 1. And then that just gave me our accounts receivable for the days in for the last 2 recorded years. Okay, inventories, prepaid expense, other assets, accounts payable, and other liabilities. These are all has to do with cost of sales. So I'm going to make sure I do the $ sign to quickly do it. I'm going to make this one the correct cell, and we're going to drag it. You don't have to do it here because there's only one with revenue, so we're not going to drag it down, only to the right. So I want to know inventory. So I'm going to take inventory. I want to know my percentage. I'm going to divide it by cost of sales. I want you to think about this. If I drag it to the right, I want the columns to move. If I drag it down, I do not want the rows to move. So I'm going to hit function F4 until that dollar sign is in front of those numbers, the rows, and will not drag down. If it dragged down, it wouldn't do it correct, but I do want to drag it to the right. And then I want to multiply that times days. Again, I want to drag days to the right, but not down. So I'm going to put a dollar sign in front of the row and hit enter. If you did it correct, now we can do find out our days in for all the current assets, current liabilities. All right, now this is important. We want to see this, and then from that, we can make assumptions what we think the future and our projected years could be. So you could just say, I think 43, it jumped up to 50.4. Maybe we think that it's going to have 45, 40. Maybe you think it's going to go up because we have to have more credit. Accounts receivable has to do with credit. So just make educated guess on these. I already typed it up, but you really don't know until you solve what happened in the previous last recorded years, and then you can make some educated guess. Okay, so now what I do is I made my assumptions of the projected days in. So I'm going to say equals, and I'm going to go to that assumptions page, and I'm going to select that first accounts receivable, which is 45, hit enter, and this is pretty quick. All I have to do is highlight all this, as so long as you have these lined up with what's going on here. Make sure they're lined up together. So what I would recommend, go into the balance sheet, copy all the current assets, and then do the next ones on the current liabilities. Just make sure they line up. All right, so I'll hit Control R, then D, and we just fill that to the right. Now we got to figure out projected account balances, which is going to go on to the balance sheet. The projected account balance. I do a little different equation, how I calculate it, than what the videos show, but this is the easy way to remember. Okay, remember this equation here, which was accounts receivable balance divided by that. That's to get the average or the days in. Now I'm looking for a total. To find a total for accounts receivable, and I can do a dollar sign from this cell. I'm going to select this. And instead of dividing, I want a total. So I'm going to multiply. Actually, I can't do the dollar sign yet. I'm going to multiply it times net revenue. Remember, revenue is for accounts receivable. I'm going to multiply it because we're trying to find the total balance. And since I multiplied it, and last time I divided, and then I multiplied times the days, right? Now, since I multiplied, I'm going to divide it by days. So it's kind of an easy thing to remember. If I'm finding totals, I multiply that times revenue and then divide it by days. That's going to give us our total in millions. I'll do it one more time here. So I'm trying to get inventory. Now I'm going to do the dollar sign, make sure it's correct. So what I want is inventory multiplied now times cost of sales. I want that to drag to the right but not down. I'm going to hit function F4 twice, put the dollar sign in front of the row, and then I'm going to divide it by days. Same thing here. I'm going to put a dollar sign, hit function F4 twice really quick. I want a dollar sign in front of the row because I want it to go to the right but not down. Hold down Shift. So this seems a little more complicated. Once you do it a few times, you'll get pretty quick at it. Next, I want to know what my net working capital is. So this is fairly easy. What I'm going to do is I'm going to sum up all the current assets minus sum up all the current liabilities. So we're going to go sum. I'm going to highlight all the current assets, close that up, and I'm going to subtract out the current liabilities, close it up, and that's our net working capital. Now, more importantly is, I want to know, depending on our working capital, what impact does that have on cash? Remember, the income statement does not show it. It just shows sales. Well, what percent of sales do I have that's on credit? Do I have the cash today? That's going to impact my cash flow statement. So what we're going to do is, since we found the net working capital, I'm going to do this equation. I'm going to say equals, and what I'm going to do is I'm going to go to the previous year minus the current year. Why? I want you to think about it. If our net working capital went up, if it went up, that means we have less money, because we said current assets were positive. If current assets go up, we have less cash. If inventory goes up, that means I had to use cash to buy the more inventory, or I'm not selling through the inventory. Accounts receivable, more customers are buying it on credit. Therefore, I'm going to do the previous year minus this year, because if that value went up, I have less cash, and that's what it will show. As you can see, we have more cash, right? This year to here, because my net working capital went down, which means I got more cash. It means we sold more inventory, less credit. Or my liabilities went down. That's less cash. If my liabilities goes up, that's more money, right? If you took a loan out today, you have more cash in your account. Okay, so we just solved the net working capital. Working capital schedule, 100%. And now we have to plug in cash flow statement, balance sheet, and then it'll be complete. Let's do the balance sheet first. Remember, the balance sheet is a balance, a total. So let's go to the current assets. I'm going to do accounts receivable. I'm going to say equal. That is our total balances right here. That's what we projected out based on this assumptions we made. And that's going to tell us how much we have. So we can solve this pretty quick. So current assets is taken care of, and you see the cash is not balanced yet, because remember, it affected our cash on our operating activities. Next, I'm going to go to balance sheet. I'm going to plug in our current liabilities. So make sure you select the right cell. It starts with accounts payable, and highlight that over. Almost done. Last part, all we have to do is plug in what is our impact on cash through our changes in working capital. So I'm going to say equals. That's the bottom of our working capital schedule right here. Now we can see everything will turn green. Double check, we got 100%, 100%. Everything looks good on that part. And yeah, God bless, and I'll see you guys later.